And so I think you just have to believe that the tech ecosystem in Africa will grow like some of the other ecosystems around the world has grown over time. Like it will take time. There are companies in this room that will grow to scale, they will exit. Talent will recycle from there, capital will recycle from there, and that's the flywheel that builds ecosystems and grows the ecosystem. So I'm super excited for the African tech ecosystem, and I think we have to start right here.
Thank you so much. Thank you so much for our panelists. Please just give them a round of applause. So we now come to the end of the panel session, but we are going to take a couple questions from the members of the audience. So if you have questions, raise your hand. So raise your hand so that raise your hand now. Don't be say when it's in all the issues, say, yeah, I remember that I had a question. So let's just remember them. So whilst that is going, please.
Okay, thanks everyone for the panel session, very insightful. So I agree with what Somto said, and I can testify because we used to do the same thing several years ago. He was giving pause, so so I'm not like I never knew what they were up to, but I'm glad to see that success. So the question I have is for all the panelists. I follow the public markets a lot, and I think liquidity flows from there all the way to private markets. So my question is, what does an exit look like for you? If not, why not? Because at the end of the day, the ecosystem will benefit if investors are able to have exit and it comes out and go back into the system.
Thank you.
Maybe go to the founders since we're talking about how you want to exit. I love exits. That's what happens.
I think as an entrepreneur, at the end of the day, you're a creator, right? You're creating a product, you're creating a service, and at some point, you have to ask yourself, do I want to run this thing till I'm old and gray? Or am I at the right time where it's good, it's mature, I just want a different challenge, I want to go build something else? It's really up to you and your shareholders to make that decision. And if an exit works, I mean, nothing stops Big Say from coming and saying, Lotanna, this thing, here's $10 million, and I walk away. Right? But then again, it's again a thing of what is the end goal for me? If the end goal for me is to take it public, yeah, because at the end of the day, an IP is actually an exit of some sort. So it's up to you to decide what works for you, what your vision for this company is, and determine if it's on this mountain you want to die. Watch the space.
Yeah. Exit. I was actually just going to do what Lotanna did and then run around the question, but I saw you try to ask it directly. So, in reality, as at this moment, we're focusing on the next few years, right? I'm building out the opportunity we have here, building for our customers. If an exit happens, it will happen. Right? But right now, we're focusing on the problem. We hope interesting things come from it, but focus on the problem for now. Thank you.
Sorry, let me add just an extra instance in that. So what would an exit look like? Unfortunately, that's past. So what would it look like? Is it a sale? Is it an IPO? What exactly would an exit look like?
For Piggy, I'm not sure it's sale can happen. The reason is meant to be upset. Yeah, so we're very retail, like there's a lot of brand. Yeah. So we're looking at an IPO. We're working together. Yeah, so that's it. An IPO
Yes.
So, just to add to that, don't sell yourself short, please, because you have to set example for future entrepreneurs. Like Dix and I had a chat about this in Toronto last year, and I could tell he's tired. You know, he's been building this company with very little capital, doing a great job. And I told him, listen, man, you're going to have an exit, but companies are bought, not sold. But whatever you do, whatever you exit, you have to make sure you achieve your purpose. And it is very important you achieve your purpose. You're going to make your shareholders money, I know it. But it's very important you achieve your purpose because that's what's going to inspire the next set of entrepreneurs. So please, all of you here, I love the IPO talk. All of you, I hope you go IPO.
Thank you so much. So, do we have questions? Who are you?
My question is for Panache. My question will be for upcoming companies like startups. What do you look into before you invest in them? So some may not be able to make traction, or what else before you make that decision, or like you would like to invest in them?
Sure. I think if it depends on the type of investor you're speaking with, right? So I would say most angel investors, with respect, entrepreneurs they know, or they have a lot of conviction in. When you come to a venture fund, like I was saying earlier, 70% of our bet at the pre-seed stage is on the team. Do they have the right insights in the market? Have they discovered something which we think can be big? Is it a venture scale business? Is the market big enough? Are they solving an important problem? And how painful is that problem? If the problem is small, cool, you're doing that, but it may not be a venture scale business. So when you start thinking about talking to venture investors, you have to think through a little bit, are you the right business for venture type of investors? Or is it better suited to raise money from angel investors or strategics? So when you come to Panache as an example, we will spend a lot of time getting to know the faculty and their domain expertise, their insights. We'll do our own research on the market and build our own hypotheses around it. We've invested in many different categories, so we have a lot of experience in certain areas. We prefer to invest in areas we know so that we can be careful. So a lot of different factors, but then always come around to the two people.
Okay. My question is also for Prashant. So I know that you had mentioned earlier that when you want to invest, it's usually 70% the founder, 30% the product. But I want to ask, are there situations where seemingly little matters, or matters that founders will consider little, like legal and compliance matters, corporate governance matters? Are there situations where they actually impact your decision when you want to make an investment? And what are the examples of those things that founders should take cognizance of? And my second question, sorry.
So just quickly on that, we know all startups we invest in are going to break rules, so I never think about compliance at that this stage of the business. It becomes important, I suppose, when you're scaling, especially like a fintech business. But I think what sometimes founders underestimate is that VC is a hits-driven business. What that means is we're only going to be right once, 1% of the time, or 5%, right? So all of us are trying to optimize the odds of generating strong returns. So I think sometimes founders underestimate how important TAM is, their addressable market. I've no doubt you've discovered a cool market, you can build a $10 million business, exit, do personally very well, but it may not be a VC-backable business because VCs are looking for unicorn outcomes. Because we only know we're going to get it once, and that's what's going to make us money. So I think it's important to understand who you're pitching. So, as I was saying earlier, right? Like maybe your business is not suited for VCs, so you should understand that and target your efforts, fundraising efforts to angels or others. But if we are going down the VC path, I encourage you to think strongly about, can this be a really big market for us to go after?
Hi everyone, I have a question for Prashant. How do macroeconomic tailwinds such as fluctuation in interest rate affect valuation, especially correction in startups during investment rounds? And how do you reconcile from corrections when interest rates can like go back low and then back and go back up?
So I think all investors missed this when the Fed started raising their interest rates. Nobody really expected the Fed to raise interest rates that quickly. We do think about macros a lot. I think what's more important to me personally, beyond the interest rates, is where is the growth in the market. And so building a growth story is important. Yes, macroeconomic growth of economic environment is important. But the interest rates, we don't consider so much in our early stage investment decisions. It definitely impacts our own business because we have to go raise money from our investors. And right now, there's not a lot of LP capital available. Part of the reason is because they can get 6%, 10% interest rate risk-free by just investing in GIC or bond. And as such, they don't see the need to invest in highly risky asset class such as venture. So I think when we're making investment decisions, we'll think about it. It doesn't drive our decision making. What's more important is there growth in this market?
Hi everyone, my name is Tunde Badogo, co-founder and CEO of Small parent brand of One by Small. My question is to Somto. I'm sure a lot of people have this question. Over the years, I've seen how Piggyvest has gone from Piggy Bank to what it is today. One of the most loved companies in Nigeria for young people. It pricked my interest often that you're not seen anywhere. Like nobody sees you. You are leading not a B2B business, a B2C, a savings business where people want to please the person that is holding my money. And you are in a startup world where like, one of the things you hear is that as founders you need to be everywhere. You need to make yourself seen, make yourself known. You know, I have TV interviews and all of those things, right? But here's a young guy like myself that has built one of the biggest companies, startup in Africa. And we've spoken on the phone a number of times. This one is the second time or third time I've ever seen you in real person. So you're a real person. But really, like, what is really behind that? Has it been intentional from day one? How do you manage that with your co-founders? Was it agreed when you guys were starting out? Oh, you know, Somto is an engineer. He's a shy guy. Therefore, Joe should be the one doing, you know, I would love to have that with my co-founder as well because I don't want to be seen as much, but then you need to like, you need to be seen, you need to be out there. So how do you do it?
Well, it's on purpose. So I think it was, there's a point the brand became bigger than everybody. That's it, right? Everybody has different perception of who the CEO of Piggyvest is. So many people see me like, Jesus, yes, and it's very important because sometimes you don't want big man that just facts. And it's just allow them to think and to imagine what they want to imagine, right? I'm sure if people even it was me, it's like this. Yeah, that's true. Again, because it's also retail, we have to be everywhere. If it's B2B, I have to beg this and beg my product and beg or this person, yeah, but it's B2C, there's an app, there's advert, I only go for strategic things, but the main reason is because the brand is bigger than all the individuals, all the co-founders. That's the truth. So we are just riding on it. So you can't overpower it by coming on top of it. So we're just in the way, let's put it that way. So that's why I'm not everywhere personally. Yeah. Our friends. Yeah, but just I think it's more because of the brand. Like everything I've ever done is been retail, very big retail focused. you have maybe a lot of your customers who are older than you, who are like, you know, so they see one small boy, they just be like, it's for small children, right? Yeah, so you see old people who use the product, they just believe it's Access Bank that owns it, or it's GT Bank that owns it, and it has been helping us, that's the truth. So I think that's one of the reasons why. Even before Piggy, we were running like a job platform, they were dealing with so many companies, then they don't want to see one small 20-something year old boy coming there to do anything, right? So I think, because of the age, just brand first. Yeah. Like we cannot push the brand. That's summary. So our personas can't be the driver. It's the brand itself that is driving it. So just in passengers steering the car. So basically everybody's looking at the car. The driver is not important. The car is just fine. So that's
So sorry.
All right. Thank you very much for this session. So my question would be about VCs. I understand I've heard a lot of things about you have to have a good network to actually raise venture capital. And for some of us, that's all I've known is probably merit all my life. And it's really, really hard to try to pound out, do some things just because you want to get money, right? To build your company. You know, if you're coming from that kind of background, how do you, and you know you have a great vision, right? But how do you manage, you know, that kind of thing where you're not necessarily used to, you know, all those networking stuff, but you believe that if we have an opportunity to compete, we are going to probably still do well. So how do you manage that kind of thing?
Start with other founders. A lot of them in this room, right? I think they've gone and done the hard work of building that network. And in my experience, a lot of founders want to give back, right, and pay it forward. So start building your network and start building it here. And I'm sure a lot of these folks will help you in the right, in the city. So when an ecosystem is nascent and emerging, yes, you always have to do the hard work earlier. You have to get into as many people as you can. But don't forget, there are a lot of founders in Nigeria and across Africa that have done it before. So lean on their expertise, lean on their network, they will help you.
Good evening. As tech entrepreneurs and investors, do you believe that we should be building technology that drives new human behavior or facilitate existing behavior? And if you do want to build or change human behavior, what are some of the behaviors in Africa that you'd like to drive via technology?
It's
a very philosophical question.
I'll maybe say timeout kind of question, so everybody has 1 minute to answer that question. So let's start from Somto.
So I think it's easier to build technology that would enhance already existing behavior. Changing user behavior is very hard. You have to have a lot of money to do it, and it has to be something that you're almost convinced that this new behavior is more efficient, or just makes them happier, or live longer, or whatever it is. I think for our case, we actually changed the behavior of people, right? So before we started, spending was the cool thing to do, buying a new shoe, buying a new game was the first thing. We had to make it such a way that saving money is now the fresh thing to do. So you have a Piggyvest is now like a big boy, instead of you buying a shoe being a big boy, right? So our communications was around those lines. When there's rice at home, people are like yeah. So even people that don't have Piggyvest, like money Piggyvest, will tell you they have Piggyvest. Yeah, they have Piggyvest app. Yeah. People go on dates and they're saying I have Piggyvest app. That's like you see for the future. Yeah, so I think we're very lucky. We did not have to spend money for that. I think it was just something we did around the marketing side of it and kind of enhance that. And to be honest, maybe people also already felt that way. They just needed an extra push. But we've also felt a lot of trying to change behavior of some things that maybe is supposed to benefit just the business and not, it's just expensive. So it's easier to enhance the existing behavior.
Yes, interesting question. So when you were asking the question, the first person that came to mind was Elon Musk, right? And again, so what Somto was saying, you need to have like a lot of money, right? If you drive like major behavior change. Yeah, so I would generally prepare to build towards enhancement, right? And then when you're changing behaviors, sometimes it can take very long, and in some cases, first movers get short, right? You might not be the person to, you might not be the right brothers, right? They were not the first people to start the hustle. You might not be Ford, wasn't the first person to start the hustle. But those guys did it, and even when they did it, they still sold like premium shitty before they eventually, because you're telling someone, even I was on a flight last week, and then the guy beside me, I can't remember who it was, and he looked at this place like, I can't believe it. It's metal flying. Like, this is 2023, right? So now imagine you in 1950s saying you want to go enter an aeroplane. But then if you have the conviction, if you, at the end of the day, people will say different things. I'll say my own, right? Especially when founders have seen small light, right? They start to feel like, yes, we have the alpha, we know what it is. But in reality, I think it's a personal race. Building anything that you want to be, doing anything that you want to do. Like, once you have the conviction, right, your heart is in the right place, you know what you want to do, you make that decision for yourself. If you want to send men to the moon, or you want to build something that allows you to travel from Lagos to New York in 30 minutes, right? It's all dependent on the person. If you believe and you want to push it to the end of the earth, it's your choice. Me, I'll do my thing. And like, I always pray that when people follow their convictions, they're successful, right? That's at the end of the day for me. Thank you.
Yeah, thanks. I think it's a journey. Especially when you consider the part of the world where we're in. Like, Somto, which you had mentioned, to radically change human behavior is very expensive. Capital globally has dried up, more so Africa. So I think as an entrepreneur, as a business owner, an ecosystem, so to speak, you start with, in my opinion, building a cycle. In this case, leveraging technology to enhance what already exists. So what are the old age traits, attributes, ways of doing things that exist? Make it better, and as you get on it, you then leverage, new technology like AI, right? The tokenization of things, gamification of things, right? To then drive people into the future that you think they deserve. But you're not going to come and start to fix the problem of the black man and giving him fancy apps when you haven't figured out if he has even eaten or if he has access to data, right? It's fixing the fundamental issues that we face and then leveraging new technologies to then drive them into the future. That's my opinion.
Thank you so much. So we just have 2 more questions and then it's done.
My question is for the new architect. So what do you think makes your product stand out from other people in the same industry as you are? Let me give an example. Piggyvest, right? I think at the time I started hearing about Piggyvest, there was Cowrywise as well. And I started using Cowrywise. And then I started hearing about people saying Piggyvest. And I went to Piggyvest, and I was literally doing the same thing. But Piggyvest had more users. So I want to know, like, how did you hack it? How did you know that people are going to use your product? Like, was it, to me personally, I could say, oh, it was the design. The experience was finer than Cowrywise. Yeah. To me, yeah, these people don't have it, right? And then you said, okay, let me put it to my own. Same thing with the Twitter, right? There are other crypto companies. So was it something you saw in other crypto companies that were missing? And you were like, okay, let me put it here that people would use my products.
Well, thank you very much. So I think, so we were actually first to start saving, savings app in Africa, to be honest. But I'm actually surprised that you're saying you hate Piggyvest after. But so I think when we first start, and because we always users were the ones telling us what to do, right? So we're just launching new products every single time, like new features, and these were things that people already wanted to see. So once we launch those things, they would just get adoption. People would be like, oh wow, wonderful. So there was always that praise, right, on social media, people telling their friends about Piggyvest. I won't say there's any special thing per se. So I think we're very big on customer service, making sure the users are happy, even down to the error messages are properly written, with an error call customer service on this number. And we just try to be as accessible as possible. Where other banks would say send an email, right, for simple things, we say call us. Right, so those small things just make more people trust us. Yeah, I think that's basically why many people choose us today. And today, so yesterday we turned 8 years old. So we're the oldest. So we're the oldest in the market. Again, you think that we also capitalize on that. Oldest. That's just basically. So I think one of the lucky ones who move first and are still in that lead.
Okay, so for us, in the beginning we didn't know for sure, but one thing we knew was that people wanted to get their money really fast, right? So I think that was our big leap forward. So the big player in town at the time would batch withdrawals. So withdrawals would go out 8 a.m., 12 or 1, and then 4. If you happen to withdraw money on Friday, 12 o'clock you're getting it on Monday, right? But of course people wanted money much faster, so we came out with instant withdrawals, right? And through our journey, we've tried to always be a platform where you can get your money the fastest out. We have the most channels of any exchange alike today, and then kudos to our team. I think something that's really there is perseverance, right? Crypto in Nigeria has seen some tough times, and just always figuring a way to navigate the landmines and stuff, I think is something that has kept us alive. Recently there was the whole thing with websites and stuff, right? So if you try to access Quidax.com today on most networks, it wouldn't go through, right? That happened with the website, happened with the mobile. We're able to pivot and still have our best month on record last month. So so there is building up things that your customers really want, really need, right? It kind of starts from there, and then just figuring out how to stay alive and give customers value regardless of customers. That's really what for us. Thank you.
So one last question.
Good evening, everyone. I think my question is for the founders, right? If you could go back in time before you raise funds, right? What would you do differently? That's now knowing better, right? Which is shaking his head. I think this question is not for you. But yeah, for the founders, that's my question. What would you do differently?
Yeah, so, sorry, hold on. So, I'm just going to ask you to nominate one of the founders.
One of them? Okay, I think we should say he struggled a lot with that. So, Somto.
I wouldn't actually think anything, to be honest. Because I've only collected money from people who help me aside money, right? Either you take me to that room, you have to speak to somebody, or you help me with a partnership or something. So it's never really like cash, the actual cash, right? So I think my investors have been very like helpful. Right? Aside, I think also that just putting to get company and doing like get to. So personally, I wouldn't change anything. And I think it's also very important because it's one of you collect money from, right? So you have to think about it from. It's not just cash. It is you're going to put somebody, you're going to make somebody join this business, and they have to help you almost as a co-founder, not like they're co-founders, and also develop the stage you are in the business, right? So you would have to reach out to them a lot, you have to ask them for help a lot. It's after they're giving you cash, right? So if they're not going to pick your call after they give you money. So that's really cash. So I think if you choose the right investors, you shouldn't regret having to change anything.
Thank you so much, Somto. Thank you to all of our panelists. Please, can we give all of them a round of applause? Thank you. So personally, I have had so much to learn. If not that, Fix has me. Me say I've been the reason how all this capital tomorrow. But yeah, thank you so much for all of the insights that you shared. There are so many things that I learned. If you chase value, capital will come running after you. That's one of the key things. Don't go for talent, go for the traits, right? So for some of us that are talentless, that was a good thing, so at least. So now I know why Dixie hired me because I don't get talent. Right, so a lot of gems here. Thank you so much, Prashant. Thank you, Lotanna. Thank you, Buchi. Thank you, Somto. One of the highlights for me is seeing Somto's face again, right? And also just listening to all of you and learning about the things that you do. So we've now come to the end of these very interesting conversations that we've been having since. I'm going to invite Dixon to please come around things off. Thank you.
Thank you very much. I really hope we benefited from this session. At the end of the day, I don't think the time we've spent is enough to do justice to this topic. And again, as a personal vision of mine, is ensuring that we create opportunities. Talent is evenly distributed, opportunities not. And our job at Cora, aside from creating opportunities for businesses to scale, see, I'm selling Cora already. But yes, apart from creating opportunities for businesses to scale, we also want to create opportunities for people. And tobacco, when the time is right, we gotta raise the capital. So, and thank you very much. I'll just use my voice. I have a lot. And thank you very much to our great panelists. Prashant all the way from Canada, Lotanna, Buchi, and Somto. Fun fact, they all went to Covenant. So we have a small gift from Cora. thank you for giving your energy and your time, to the rest of us. So please, can we, present them with our boxes? Yes. Oh, I mean, it's okay. Oh, yes. Yeah. At last. Okay. All right. Next box, Lotanna Julian. I think I should start there. Good? All good? Okay. Then Mr. Innocent Okoro. He said that thing because of me.
Yes.
I was going to give it out. Yes. Thank you. Thank you. At this junction, I'll pass it back to the host to round up the event. Please feel free to mingle around. I think we have all your emails and not all your data. So I think our marketing team will be reaching out. If you're building anything interesting in this space, please feel free. I think we're going to send out an email afterwards, and we'll be able to funnel some of the great startups. Some of the startups I've already met with Prashant. He's always open to listen, and he's always looking out for the next. I want to say Shopify because he did Shopify, So he's looking out for the cover is not there yet, but he's looking out for the next Shopify. So we'll send you out an email. Please, if you're building something great, reach out. Also, some of our panelists here do invest from time to time as well. They're looking to support founders in their journey. So thank you very much. Have a great night and promise.